Hey there, Nathan Soliday with Success Mortgage Partners. I want to welcome you to our first-time homebuyer webinar where we're going to answer 20 of the top questions that most first-time homebuyers want to ask. Before I get started, I did want to make sure that you had my contact information in case you ever had any questions that I can help you with. You can see my email address at the bottom of the screen is nsoliday@travismortgage.com, travis-mortgage.com, and my direct phone number is 812-620-0046. And again, you can text me on this number anytime or give me a call, and I'll be sure to get back with you with anything that I can help you with. So let's jump right on into the questions that we have. This will be just a short video. I'm going to try to keep it under 15 minutes or so to make sure that we can get through all this and make sure you have time to watch that. And again, feel free to reach out to me with anything that you may need. So let's get started. First of all, we just want to kind of answer the question of what is a mortgage? And a mortgage is actually a loan or a lien on a property. And we always hear the phrase mortgage all the time, and basically it's the promise to pay. So you're going to take out a loan, the collateral for the loan itself is the mortgage, or the collateral is the actual house itself. So like I said, that's the basics definition of what a mortgage is, and something to keep in mind there. So we always want to kind of, as a home buyer, we always want to see what kind of options are available out there. And there's several different options to choose from. Many of those options are basically the FHA loan, the USDA loan, VA loan is a great option to go with. Obviously, construction loans and 203Ks, but and even a conventional loan with 3 or 5% down payment. So there's a lot of different options out there that you want to be aware of. And one way to find out what you can qualify for is basically just to do a short loan application to see which program may work for you. Now, in order to actually complete an application, you kind of see the steps here that need to be taken to secure a loan. You can see just kind of a listing of different items that are needed to get an actual pre-approval. You can see the list is pretty exhaustive here. You've got pay stubs for the last month or two. You've got W-2s and tax returns, recent bank statements, proof of your debt, which debts will show up on a credit report when we run that. But we can see what kind of car payments or credit cards that you have and that type thing. Proof of other income, 12-month rental history, and things along those lines. So those are some of the basics that are needed for a loan application, along with the fact that we have to double check credit, see what kind of credit scores you have, see if you meet the requirements for the different programs that are out there. One question we get quite a bit is, how is a pre-qualification and a pre-approval different? What's the differences between the two? Pre-qualification is really more of an informal, process that's done. It can be done over the phone. A lot of times it's a way to kind of break the ice to see, get a ballpark idea of what you can do, from a loan standpoint. And a pre-approval is more of a formal commitment to lend. That's where we actually, gather some of the items that were on the previous slide, and we really dig into more of what you can afford and really get that narrowed down and make sure that you're good to go, with looking for a house. So that's the differences between the two types. Now, a lot of times people want to know, what is a credit score and how do lenders use them? And just in a brief range, a credit score is basically a snapshot of what your credit looks like today. So if you made a 30-day late payment a couple weeks ago, it's going to actually report that on your credit bureaus today, to where it's going to have an effect on the scores. So, credit history is important. Recent credit history is very important because that's, anything new is what kind of factors into that. From a credit score standpoint, if you want to buy a house right now, what we offer, we can go down to a 600 credit score. So FHA and VA, we can go down to that. If you want to buy with no money down, with the USDA program, it requires a 640 credit score or a 0 credit score if you have something along those lines. So you can keep that in mind. But from a credit score standpoint, especially if you're over a 700, things are really, really good there. You're going to see your best interest rates when you're at a 740 or better, but still interest rates are really good right now. And, so even if you're at a 640, 660, you're still going to have a pretty good rate, especially on an FHA loan. How can I find out about information that's on my credit report? When we do a loan application, we're going to give you a copy of that credit report, or we're at least going to go over that with you. You can also go onto annualcreditreport.com and request a free credit report as well. I believe you can do that once a year on that to keep track of that. How do I choose the best loan program for me? Now, this is a good question, a lot of that depends on what you can qualify for. You may want to buy with no money down, but your credit scores may be too low, or you don't want to pay mortgage insurance. And if you have a high enough credit score, you may be able to get out of paying mortgage insurance. So that's a nice option too. So you want to ask yourselves these questions: how do you expect your finances to change over the next few years? Are you planning to live in this home for a long time? Are you comfortable with the idea of changing your mortgage payment right now, or with a little higher payment and that type thing? And what do you want to do to be mortgage debt free, or when do you want to be mortgage debt free? Which means, do you want to do a 15-year, a 20-year, or a 30? A lot of that just depends on your personal goals, your income goals, and your retirement goals. Now, what types of loans are out there and what advantages do they have? Well, we mentioned FHA just a few moments ago. FHA is the most lenient of all programs. It allows you to have a higher debt ratio, and then it also allows you to do a low down payment and that type thing. So FHA is a really good program. It's a You can also get a fixed rate on FHA, and it's fixed for the life of the loan. And again, it's usually 3.5% down payment is the minimum that you would have on that. A 203K loan is a loan that if you had a fixer-upper house that you could qualify for. There's a lot of steps to take depending on how much work and how involved that work is, but that could also be an option for you. Number 9, what is locking in a rate? To be able to lock in an interest rate, you always need to have a property, obviously, so you can lock it in for that property. So if you've got a contract on a house, we could lock it as soon as you have a contract or an address in mind. But locking in a rate, it guarantees your interest rate for a certain period of time. It protects against interest rates fluctuating every day because they do change based on what the markets do. And then it has the question, should I wait to lock? And it kind of just depends on the interest rate environment at the time. If it's really volatile, you would definitely want to lock right away. But what I usually recommend is if you're comfortable with the payment and the interest rate that's quoted, then I would go ahead and lock it just to make sure that you don't lose any money, in the short term. So again, that's something that every borrower needs to look at specifically to see, what's the best option there. Number 10, what are discount points? So discount points are basically a way to lower your interest rate by paying a little extra in closing costs. One of the questions I get all the time is, what are your closing costs and discount points? We don't typically charge any kind of points unless it's just recommend or requested from the borrower, to get a lower interest rate. But rates are so good right now, a lot of times it takes several years for you to see the actual benefit or the payout of that. And number 2 says recommended if you plan to stay in that home for a while. So if you found your dream home and you don't ever think that you'll ever refinance, that house again, then points may be a good idea. But again, it's something we would need to talk about at that time. Discount points are typically tax deductible based on your, tax bracket and that type thing. Number 11, what is included in your monthly mortgage payment? So it's a good question. So when you're talking about a payment, of course, obviously you have the principal amount that you have to pay back. You have your interest that you have on the loan, but you also have mortgage insurance depending on the program, and you also have your real estate taxes and your homeowner's insurance. So on your taxes and insurance, basically what I tell everybody is once you have a quote on your insurance or once you know how much the annual taxes are on the property, you basically just divide those two numbers by 12, and that's what gets added to your actual payment itself. On the mortgage insurance side of things, that's going to depend on the term of your loan, if you're doing an FHA loan or a conventional loan, or even a USDA at this point, as far as what that amount would be. So again, you would need a custom quote on that to be able to be sure that you have a good idea of what that payment will be. But all of those things can and most likely will be included in your mortgage payment. Number 12, can I use gift money? And the answer is yes. There's a certain process that you have to do, but as long as you're getting gift money from a family member, and as long as we can document the transfer of that money and have the gift letter completed and that type thing, then yes, absolutely, gift money is a great way to go. And again, that kind of depends on the program, but we can look at that and see if that's a great option for you. But it's perfect for parents or grandparents that want to help their child or grandchild, purchase a home. It's a great way to do that. Number 13 is, what is LTV and how does it determine the loan size or the size of my loan? So LTV, first of all, stands for loan to value, and that's the amount of money that you can borrow compared to your purchase price. And your loan to value is basically your mortgage amount divided by your appraised value of the property. So, for example, if your mortgage amount was 96,500 and the appraisal was 100,000, then your actual loan to value would be 96.5. That's important because it tells you basically your minimum down payment requirements for each program that is out there. Again, FHA is 3.5%, USDA 0, VA 0, conventional is 3 to 5%, and so on. So that gives you an idea of your loan to value and how that's determined. Number 14 is, what is private mortgage insurance? Private mortgage insurance is required with a down payment of less than 20%. So a lot of people don't have the luxury of putting 20% down on a house. That's okay. It just means you're going to need to pay a little more on your house payment to make up for that 20% down payment that you don't have. It provides basically default insurance to the lender. And like with a conventional loan, it's going to stay on the loan until you're down below 80% of the value of the house. So it'll stay on there for a while. Also on FHA, at this point, it'll stay on for the life of the loan. So, and it's called, it's got a different name, but it still works out the same as far as with the PMI. So that's how it's going to work. Again, a lot of people get hung up on private mortgage insurance, but it is a nice thing because it does allow you to buy a house before you have 20% down payment saved, which in a lot of cases that may never happen, as far as saving that. So it's still a good tool to use to be able to buy a house, sooner rather than later. Number 15 is just a slide that talks about different closing costs that are out there when you're looking at buying a house. Of course, you've got attorney fees, property taxes, interest, lender fees, recording fees, a lot of things like that. And you can see the list there. So there's a lot of things that can make up closing costs, but you can also, with the help of your real estate agent, you can also negotiate for the seller to help you pay some of these closing costs or all of these closing costs. So that's nice too. So this gives you an idea of what different, closing costs could be whenever you go to buy a house. What is an escrow account? So basically an escrow account is an account that you have that breaks up your annual taxes and insurance costs into monthly payments. So I mentioned that earlier. You just basically divide those two numbers by 12 and it gets added to your actual house payment, but it also keeps you from needing to pay your taxes and insurance separately in a separate bill once or twice a year in a larger amount to the provider. It also prevents tax liens, loss of property, or any lapse of insurance coverage because they do keep an eye on your insurance to make sure it's active at all times. So that's what an escrow account is. And again, most people like an escrow account. From time to time, the escrow can get behind based on if insurance cost is raised or if taxes are raised. But for the most part, it works out really well for a consumer. What happens after I've applied for a loan? Again, if you go to loanswithnate.com or nathansoliday.com, you can apply for a loan. And then what we'll do is kind of go through that process of checking your credit and then going through all the way to the phase of closing, funding, and moving in. So that's the great thing about that. And providing requested documentation in a timely manner is very important. What responsibilities do I have during the process? Is what the question that you want to ask yourself. You want to make sure that you don't change jobs, you don't make any huge purchases during that time, don't buy furniture until after you've purchased the home and all those things. So before you make any kind of big changes in your financial situation, make sure to ask your loan officer. What should I look for during the final walkthrough? Just some things to watch for. Examine every corner of the house, check floor to ceiling, make sure the seller has fixed everything they've promised, and make sure that everything is perfect before you close. Number 20, and the last one that we're going to look at today, is what can I expect to happen on closing day? Closing day, you're going to bring your insurance or proof of insurance. If you have a down payment, you're going to bring a cashier's check for that, and you'll get proof of inspections and or warranties at that time, and you'll sign on the dotted line. You'll buy that house, and it'll be a binding sales contract, and you'll get keys to your new home, which is fantastic. And then you have the opportunity to enjoy your new home. So again, it's a very exciting day and the best part of the process. We're going to finish out the video now. I just wanted to thank you for taking the time to watch this. Hopefully it was helpful for you. Again, I just wanted to make sure that if you have any mortgage questions at all about maybe what you've heard today or anything that you are unsure of from an income standpoint or employment or credit scores, feel free to give me a call. I'll be happy to help. Again, my cell number is 812-620-0046, or you can email me at nathan